Would the seller be open to any creative financing opportunities on this property? They might come back and say no. And what might happen too is they say no initially, they find out that the market's a little bit softer than what they're originally thinking, then they might come back on that a little bit. And so following up with properties that haven't sold, following up with people that you've talked to that have said no on the creative financing certainly is well worth that time. Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, where we talk about building time and financial freedom through different opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your real estate investing journey, check out our website, freedomthroughrealestate.com. That's freedomthroughrealestate.com. We've got a lot of great information on there, articles, videos, strategies that you guys can use to get started. And today, what we want to talk about is we're still early in our 2025 year. So we're going to talk about the top 5 real estate investing tips for 2025. And so if you have been thinking about investing, analyzing deals, whatever that might look like, we want to be able to help you this year. I think that this year is a very pivotal year in real estate investing. And so there's certainly some great opportunities out there. They're much harder to find. I tell people it's like looking for a needle in a haystack, and we're actually trying to find that needle to decide what deal we want to do. And so it can be a challenge. And so I want to give you guys 5 good pieces of information, tips for you guys for your investing journey here in 2025. Now, number 1, I'm always going to push towards figuring out how to take action, figuring out how to get in the game. You can't figure out where you're going to go, what you're going to do, how that's going to look, what you're going to like, what you're not going to like, unless you take action. And so I always tell people, find a way to manufacture a win here. So if I haven't done any real estate investing, what's a way to get started? If it's not my own deal, can I join up with somebody else? Can we do a deal together? If I'm in some deals and I'm trying to get into bigger deals, who are some relationships? Who are some people that I need to meet to try to get into some of those bigger deals? If I'm considering a different type of asset class, who can I find that's already doing it at a high level and find a way to partner with them? And so you've got to find a way to manufacture a victory, manufacture some success as a way to take a step forward. So one of the things that I've been thinking a lot about is Hunter Thompson has a conference called Raise Fest, and we went last spring, and there was a quote there that I still have and still pops up a lot of times throughout my weeks. It says, over the next 24 months, you'll see the best deals that you've seen in years. And it might be 10 plus years till you see deals like that again. Now, what I'm not saying is deals are all over the place. However, the deals that we can find, we'll probably look back on here in a few years and say, dang, that was a really good deal. I wish I would have done more deals like that. And that tends to always be the case, right? Everybody wishes that they could have invested back in the last market crash. But the problem is when the market was crashing, everybody was trying to get out or they were losing so much money. And so you've got to figure out, as folks are running out of the fire, how do you find a way to run into the fire? And so I'm always going to push towards taking action. Now, that doesn't mean doing something stupid. So the disclaimer with that is, you don't have to do something stupid, but think about, how do I find a way to get some success? How do I find a way to take that next step? Because if I wait through 2025 and I don't take a step forward, you're behind the 8 ball. You've got to figure out a way to get a win, get a tally on the board. And it doesn't have to be 10 properties or a property every month. I know sometimes we tend to get blown away by these big gurus that are doing big things. Just find a way to move the ball forward and then say, I'm not going to stop until I figure that out. I'm not going to stop till I find the deal. I'm not going to stop till I find that business partner, but find a way to take that action. Imperfect action will outperform perfect inaction. I always tell people I'm a recovering perfectionist, and I say that as a way to ingrain in myself that it's okay to not be perfect. I tried to be a good student. I tried to get good grades. I always tried to do the right thing. And so sometimes that keeps me from taking action. And so when I tell people I'm a recovering perfectionist, it's my own affirmation that I need to figure out a way to take some action. We often hear people, they're very good on paper because they've listened to a lot of casts, they've read a lot of books, they've talked to a lot of other gurus out there, but they haven't found the way to take action. They keep getting ready to get ready versus getting in the game. So step one tip, find a way to take action. This is going to be your year. 2025 is going to be your most awesome year in real estate, but you've got to figure out a way to take that action. Okay. Number two, look for seller or creative financing opportunities. We've talked a lot about creative financing. It's been kind of a buzzword, especially after people like Pace Morby have made it much more popular. But the reality is creative financing's been around for a long time. And with interest rates still trending high, I think a lot of folks last year were hoping that rates would be lower by now. They're not. It doesn't look like they're going to get significantly lower here in the near future. Finding ways to take advantage of previous interest rates, previous deals that were done will be helpful to you. And I think that people are going to be a little bit more open to it because it's being talked about a lot more. Now, on the residential side, what tends to happen, right, is when we sell the house, we're going to use that money to go buy our next house. So it tends to be a little bit more of a struggle. Not saying you can't find creative financing opportunities. They're absolutely out there. However, it's a little bit more of a challenge on the single family homes. When you get into multifamily, it's, just a matter of kind of how much am I going to close with? What am I going to do on the next deal? If I can maybe make a little money as a seller with a buyer, doing some type of seller financing, that might be a good opportunity. What we find doing commercial properties is that sellers are much more open to creative financing opportunities because they know the market's a little tougher right now. Maybe I can get a higher price if I'm willing to do some seller financing. And so those opportunities are out there. You just have to ask, right? And so something that I typically say is, hey, would the seller be open to any creative financing opportunities on this property? They might come back and say no. And what might happen too is they say no initially. They find out that the market's a little bit softer than what they're originally thinking, then they might come back on that a little bit. And so following up with properties that haven't sold, following up with people that you've talked to that have said no on the creative financing certainly is well worth that time. The other thing is it doesn't have to be seller financing on the entire purchase. Maybe there's a portion of the purchase that's seller financed. Two of the deals that we struck deals with the sellers where it was just a portion. The interest rate was a lot lower than what our total rate was with our lender. And so it brings that, kind of blended rate down just a little bit. We're looking for, can I shave off $50 a month, $100 a month, $200 a month of cash flow by getting a little bit lower interest rate with a seller versus, having that loan with the bank at a higher interest rate. And then there's one other deal where we just took over the mortgage. I think the lender saw the writing on the wall that it was going to be tough for the previous sellers, in this case, to be able to keep up with the mortgage. We came in, we were well funded, and we saw kind of the plan for the future here, talked to the bank and said, hey, here's what we're looking to do. Would you allow us to just continue to take over this existing mortgage? And they said yes. And we got a letter from the bank acknowledging that and kind of approving of that. So they're out there. And so I would just say, if you're somebody out there that's looking, just ask the question. And if they say no, like I said, if it's a really good deal, just follow up in 2 weeks. See what they say. They might change their tune. We have a property that we're looking at that we've been kind of in discussions. We looked at the property 2 years ago. Seller wanted to sell for a certain price. Then all of a sudden now they're willing to be a little bit more flexible on seller financing. And we made an offer. It didn't work out. And now they're willing to be maybe a little bit more flexible on seller financing. And maybe the prices come down a little bit. So those things tend to happen. You just have to realize that, you don't have to convince everybody. I think sometimes when I've been selling multi-fees, I get calls from prospective buyers and it's like they're trying to convince me why the seller should sell with seller financing. And I was like, I get it. You don't have to convince me as an investor agent why they should do it. It's not in everybody's wheelhouse to do it, or maybe they don't want to do it, or maybe they're not in a position to be able to do it. And so if you're reaching out on these properties, it's not your job to convince the agent. Now, I will say a lot of agents may not understand it, and sometimes what they don't understand might seem a little bit scary and they're hesitant to do it. It just shows you need to go knock on more doors. You need to go make some more offers. You need to reach out to more people. And so don't let people being resistant to seller financing help you to get down on yourself. You just got to go talk to more people. So I think there's a lot of value there in those creative financing, those seller financing opportunities. So certainly look to that. That is tip number 2. Tip number 3 is if the numbers pencil out now, spot where they're going to look better in the future. I say that with a little bit of a disclaimer of we never know what's going to happen with interest rates. So when they're certainly higher today than they've been a couple of years ago, we tend to think, oh, they're just going to go down. So you still need to make a wise decision. It doesn't just mean scoop up anything and everything right now, but be smart with it. However, you can look to refinance in the future, depending on the type of deal that you're doing. And hopefully in that period of time, interest rates would go down. So I'm never going to suggest to do something that you shouldn't do or something that's not going to cash flow. If you guys are looking for, I need something to cash flow X amount, if that deal's not there, then don't overextend. However, we are tending to run into the wind a little bit here, and so maybe in the future, as interest rates come down, we might be able to draft a little bit, have the wind at our back to where some of these deals make sense. And then that also comes back to those creative terms, right? If you can get the numbers to pencil close enough, and then you are able to do some things creatively with the seller to get those numbers to be a little bit more in your favor, that's awesome. In addition to that, it's not just a spreadsheet, right? We still have to continue to look at the neighborhoods that we want. What's the rental demand like? What's the tenant mix look like? What's the property condition? What is my repair budget? How's that going to look? And so don't skimp on some of those things. Like maybe you might, think vacancy rate, like, oh, I can kind of make that a little bit lower, or maybe my capital improvement budget, I can make that a little lower to try to get the numbers to work. Don't cheat your numbers to get the numbers to work. However, if you can get the numbers to work right now, I think you'll be in a more favorable spot here than when rates do go down. So if the numbers don't pencil out now, you can look to refinance later. But like I said, that comes with a heavy disclaimer of don't do something stupid, don't overextend. Real estate agents, are you tired of letting the busyness of life get in your way from achieving your real estate investing goals? I'm super excited to announce we've created the Real Freedom Investor Agent Tribe. It's a place for you to come, get educated, and network with others so that you can make sure that you're hitting your real estate investment goals. So find out more on our website, realfreedom.com. Click on the store link. We've got a membership, we've got a mastermind group, and some private coaching as well. Check it out. I've priced it super low. The goal is to get you in, not have price be a determining factor to keep you from your goals. So come check it out, schedule a call with me, and we're happy to see where your real estate journey is going to take you. Number 4, property and asset management is crucial. A lot of people get so excited when they look at that initial spreadsheet, right? I'm analyzing a lot of deals. I'm plugging a number of deals into my deal calculator, and all of a sudden I see one that seems to pop and it's got a really good number. And so for somebody like me that loves spreadsheets, you start to imagine, okay, what would life be like with that cash flow number that what I've projected? What would life be like with that appreciation number I've projected? And when I look to sell in a couple of years, look at what my potential profit's going to be. Man, I'm going to make a lot of money. All that is good. However, it's just numbers on a spreadsheet. So what happens between the time that I purchase the property and the time that I sell the property? That property gets managed, right? And so all of my assumptions that I've put in, my vacancy rate, the capital improvement budget, what the property management budget, how much I'm putting aside for reserves, all that stuff turns from a spreadsheet into reality. And what we can't overlook is the value of great property management. It's no coincidence that the properties that we've had where we've entrusted to property managers we've had good relationships with, those things have continued to perform well. We've extended a little bit to some properties where we didn't previously know the manager, or in areas we haven't invested before. Maybe the numbers look good on paper, and we've had some challenges. That being said, real estate investing is always going to have its challenges, and so nothing's going to be perfect. However, don't overlook the value of great management. So just as an example here, one of the deals that we did, we closed on a property. It was 8 units, 2 1-bedrooms, 6 2-bedrooms. The property manager before that may have been a bit lazy, may have not had attention to details. I often tell people previous property managers or lower performing property managers, they're just looking for easy, right? I'm trying to do as little amount of work. So if the tenants are in the property, great, let's just keep them in there at the same price they were before. Because if I try to raise rents and they move out, now I got to go find new management. And so if we continue to do that time over time over time, what happens is we're actually losing out on a lot of monthly rent, which would really help the bottom line. And if property managers are compensated based on a percentage, they would get a much higher percentage. However, we tend to go towards avoiding work, right? So we had a building, one bedroom rents were 625 and 660. So these were the two one bedrooms that we had. 625 to 660. The two bedroom units were renting from 735 to 800. Now, when we came and looked at the numbers, we said, "Oh my gosh, these are well under market rates." So one of the value adds that we had was we can increase the rents. The property honestly didn't need a lot of work. And so a portion of it was just increasing the rents to market rates. And we also discovered that there was a tenant that hadn't been paying rent for a year that the seller didn't know about because the manager hadn't let him know about it. And so that's just, just improper management. So we come in within a few months' time. We just let tenants know, hey, here's what we're looking to do. We're looking to update some units. We're looking to increase some rents. Here's what we want to do. And actually, one of the tenants that was in the one bedroom unit, and this is where, challenging your assumptions, you might think, gosh, if we're going to raise rents, tenants are going to want to leave. The reality is, if it's still a good building and they understand that market rent is what it's supposed to be, and they're getting it well under market rent, they might be more flexible to stick around. So we actually had somebody. They were in a one bedroom unit. We talked about, hey, here's what we're looking to do for two bedroom units. And this tenant said, hey, actually, I've been wanting to increase from a one bedroom to a two bedroom. So not only did they have, kind of the natural rent bump, but they had the rent bump from a underperforming one bedroom unit to market rent of a two bedroom unit. And they were willing to make that move. And with a couple of the other tenants, we said, here's going to be the new rates. And they said, okay, because they recognize this is a property I want to stay. So I think sometimes we tend to think that keeping things under market is a challenge. I've heard some great stories from other people that have bought properties well under market rents where they increase and it's actually kind of outperformed what their assumptions were on who leaves and who tends to stay. So in this case, yeah, we brought one bedroom rents up from 625 to 660 up to 825 and 850. And then we brought the two bedroom rents up from 735 to 800 up to 1100 to 1200. So in that case, it's, about $400 a month on the two bedrooms and $200 a month on the one bedrooms. We increased the rent by 32%, really just with negotiating with the tenants, and a couple left, and we got a couple new people in. But because it was a good quality property and we had good quality market rents, we were able to find tenants. And so we still do have one vacant unit there. It was one that we renovated more heavily. So still trying to find that tenant. So once again, not everything's perfect, right? However, we had an increase in market rent. Other things to think about with property management, how does it work for rent collection? Are they staying on top of the tenants? For the tenants that get behind, are they just letting it slide? Or are they doing what they need to do, negotiating or following through on potentially kicking somebody out that's not paying? Are they staying on the ball with that? Or are they just being lazy and not doing that? So that's one thing to consider. Other things to think about, what's the communication like with you as the owner, right? We would hope that property managers would communicate better than us than they probably do with their tenants. So if a property manager's having a tough time getting back to you as the owner, what does that look like with their tenants? They're probably not getting back to their tenants better than they're getting back to you as the property owner. So think about that. And then managing the budget. If you guys lay out a budget of here's what we're looking to spend for certain repairs, here's what we need. Are they going out and getting quotes from multiple people? Are they reporting back to you? Or are they just moving forward with things that are a little bit more expensive? So all those are things that you need to watch out for. And as a property owner, right, your property manager is somebody that you hired. So you have to stay on top of them, just like we're asking property managers to stay on top of their tenants. It's your job to stay on top of your property managers, making sure that you're getting what you need when you need it and getting that communication, getting that reporting, and making sure that they're managing your asset well. And if not, having those conversations with them. So I think, a lot of times, early me would be really excited looking at what that spreadsheet looks like. Oh my gosh, here's all the money that I can make. And I think where a lot of people fall short is, hey, it actually didn't perform like I thought it did on the spreadsheet. And so now I'm either not making as much money or I'm losing money. And then you've got some problems. So oftentimes we see properties that I saw a lot of duplexes, triplexes, fourplexes that would get sold about every 12 months, every 18 months, because it probably didn't perform the way that they wanted it to perform. So don't underestimate the value of great property management. Now, if you're doing property management yourself, still factor in your budget before you go to buy something. What would it cost to hire a property manager? Because what you don't want to have happen is there's no margin there. And then life gets busy. You're not able to manage the property. Maybe you have to move. Maybe have work and your job requires you to move. Maybe you add, extra kids to the family and life gets busier, or, work gets more stressful, whatever it might be. You decide to hire a property manager. Well, now all of your little margin that you had available is squeezed out, and now you turn negative because you end up having to pay a property manager. So I always encourage people, put that number in there for a property manager. Make sure that that property hits your goals, including a number for a property manager, because then if you do try to hire somebody down the road, you've got that cushion already built into there to do that versus having to go negative if you do have to hire a property manager. The other thing I will say is if there is that margin in the budget, a great property manager is well worth it, to not have to figure out how to do everything, how to learn how to be a property manager, how to figure out how to go get quotes on repair work or something like that, or you get a call and the furnace is out in the middle of the winter in Minnesota here. What do I do? A property manager's already got that Rolodex of people that they can reach out to and contact. So tons of value in the property manager. Number 5, really thinking about your insurance costs. Make sure that you watch your insurance costs. Now, we're recording this episode kind of after the California wildfire stuff has happened. Even before that, we've seen insurance costs just continue to creep and creep and creep for a few different things. Not only the higher cost, but a lot of insurance carriers are just not covering certain types of properties. Now, we're in the apartment space, the larger multifamily space. And so depending on the age of the building, the age of the roof, the age of the mechanicals, whether it has fuses versus breakers, things like that, the wiring is something that's being much more scrutinized. And so there's just not as many carriers out there. And so because we buy different buildings in different areas of different sizes and different spaces, I encourage folks, take a little bit of a shotgun approach out there with insurance just to see what other rates are out there, because we've seen numbers all over the board. And while you may have a favorite carrier that you've used before, that helps to keep them sharp. But at the same time, it also helps to make sure your budget works out. And so, just say, hey, I'd love to use you if it works out. I'm going to send out for these other quotes just to make sure we're sharp and to make sure we're getting the best value that we can. And so if you have a great relationship and an insurance company is proven to pay out quickly and handle your claims when time comes, that's okay. If the price is close, great, stick with the person that you like. However, what we found is better to at least just see what those numbers are. And so I'll reach out to, on an apartment building, 5 to 10 companies, maybe 12 companies. Most of them don't get back to me. Most of them say, no, we won't cover it. And then maybe there's 3 or 4 that we actually look at and see what that cost is. So insurance costs are going up. Deductibles are also going up. And so hey, we can match that rate of what we did last year, but the deductible is going to be a little bit higher, right? So you're still not getting that same value. So you've got to take a look at that in addition to, everything else is happening. But yeah, as we had, a 2024 where, we got beat up by hurricanes and then these wildfires in California. Insurance is a tough spot right now. And so you don't want your margins, right? As we talk about the properties on the spreadsheet, you don't want those margins to get eaten up by a ton of insurance costs. So there you have it. Top 5 tips for me for investing in real estate in 2025. Just to summarize here, number 1, find a way to take action, right? Get in the game, manufacture a win, get started, get to your next property, upsize, whatever that might look like, but figure out a way to get in there and get in the game. Number 2, look for creative financing opportunities. Open up that discussion, see if you can find something. Number 3, if the numbers pencil out now, hopefully you can find a way where they're going to get better in the future as you experience better rates. With that being said, don't overextend. Number 4, property and asset management is crucial. Make sure you find great people that are going to manage that asset for you and do an awesome job. Number 5, watching out for insurance costs, making sure that you're doing great due diligence to understand what that insurance looks like, what those deductibles look like, so you get the best deal possible. So there you have it. Top 5 real estate investing tips 2025. If you guys want to get started, we are looking for people to invest with us on our deals, the apartment buildings that we're looking for. So if, hey, there's a lot of barriers to entry for you, you can partner with us. So go to our website, realfreedom.com. That's RELfreedom.com/invest. You'll also see a pop-up menu on top as of this recording that you can click on that'll take you right to that page to figure out what it looks like to invest with us. We'd love to have a conversation. We'd love to see what your real estate goals are and see if we can do a deal together. So I think 2025 can be an awesome year. Really excited for you guys to chase your journey, chase what your goals are, and get into a property, get into a bigger property, whatever that might look like, and hope you guys have an awesome and a successful 2025.